Hello everyone, welcome to the Ichimoku charts.com daily analysis for the S&P 500 for Monday, May 20th, 2013. Well, a continuation of the trend to the upside today, and a candle that's made a higher high and a higher low. Previous day's trading, another first time frame uptrend, a very bullish candle, a candle with a very large white body where the market opened at the low and closed at the high, denoting the buyers closing with very strong control of this market and showing commitment throughout the whole trading day. In comparison to today's trading, if we look at the body of this candle for today, there's virtually no body to this candle, and this is pretty much a doji type candle, and that denotes that the buyers have lost a great deal of momentum. For the previous day's trading, in terms of net effect between the open and the close, they've made a substantial amount of net upside momentum. And today all of that has evaporated, and that does raise serious doubt about the continuation of the trend to the upside. Doji candles are candles of much indecision, and that's because neither side made any net bullish nor bearish progress on the day between the open and the close, and that basically says that neither side are quite strong. If we look at where this market closed, it's closed down towards the low. So for the previous day's trading, we had the buyers in control. Today the sellers have taken control at the close of trading, and that does suggest potential for a change of trend. And we also see this largish shadow on the top of the candle, denoting strong price rejection from the high up around 1672. So the buyers have lost commitment up around that area. So a lot of this reading of the short-term dynamics suggests that there is good potential for a change of trend to the downside. In terms of the candlestick as well, it's a potential harami reversal pattern, and that's where we have a previous uptrend in force, a first time frame uptrend. We have this largish white body candle. The body of the current candle is within the body of the previous candle, and the trend is still up, and this suggests the good possibility of a change of trend. Haramis tend to be very good reversal patterns. 2 trading periods ago we had a potential harami, but as I always mention, we do require confirmation of the change of trend. So we were on the lookout for a potential change of trend. Quite a bearish candle, but the market took out the high and established that higher high and higher low once again, with the trend continuing to the upside. Tomorrow's trading will be no different for us. We will be looking for a potential lower high and lower low and a potential change of trend. Now if we do see that change of trend, the area around the Tenkan Sen at 1647 should hold as very, very strong support for this market. And very often when we see a market that has very strong upside momentum, that's the first area that we see support, and the market tends to bounce off that level. So 1647 is very important. If we look at the Kijun Sen, that's trading down around the 1600 round number level, so that should offer extremely strong support for this market. Now in terms of the Fibonacci extension, we're examining the relationship of this first time frame uptrend to the previous time the market was trending up. And 2 trading periods ago we saw a bullish close just above the 423.6% level. That suggested there was a possibility of the trend continuing, and we have seen that happen. And today though, with the sellers taking control, with this potential candlestick bearish candlestick reversal pattern, it does suggest a good possibility of a change of trend, and the very small body on the candle denoting the loss of momentum by the buyers suggests potential for a change of trend. So we will be on the lookout for a lower high and a lower low. If however the trend does continue up, we don't have any potential resistance until the market trades up to around the 685.4% level. That's based on the Fibonacci technique, and that's up around 1718. Now obviously if the market does trade higher, the 1700 round number level has potential to offer strong resistance just on a psychological basis, being a round number. So that may come into play if the trend does continue to the upside. In terms of the Fibonacci retracement, we are in an expansive mode of that. We have been trading up for quite some time. The market is trading in a bullish manner up above the 423.6% level. That's at 1650, and technically the trend remains up, so there is a possibility of this trend continuing to the upside to the 685.4% level at 1692. quite rare for markets to trade up to around those levels, but this really does say something about the strength of the buyers in this market. But in terms of the short-term trading for today's trading, the buyers really haven't shown any strength. They've actually lost commitment, so there is potential for a change of trend. Now, in terms of Ichimoku, obviously a bullish market in all three timeframes. The market's trading up above the cloud, so we're bullish in the long-term time frame. We're trading above the Kijun-sen, the pink line, so bullish in the medium term, and bullish in the fast-term time frame by trading up above the Tenkan-sen. We had a bullish breakout up above the Kijun-sen and the Tenkan-sen here quite some time ago, down around the 1578 level, and the market has gone on with that move. A very good buy signal in terms of Ichimoku. Was a very strong buy signal because it occurred up above the cloud. So basically looking at where this market is trading in relation to the indicators, it is looking a little bit overextended in the long-term time frame by trading a fair way up above the cloud. So it wouldn't surprise to see the market attempt to retrace back towards the equilibrium in that long-term time frame suggested by the cloud. The cloud actually is moving flat at the moment, so if this market continues trending up, the higher that it moves over the next couple of weeks, the more out of equilibrium it will become, and then when we do have the retracement back towards equilibrium, it could be quite significant. In terms of trading against the pink line here, the Kijun-sen, it is looking a little bit overextended too. The distance away from there is quite a substantial distance as well, so we do need to be aware that the market may bounce back towards that, but the Kijun-sen is still pointing up. It hasn't turned flat at the moment, so there is still a possibility of this market continuing the trend to the upside. In terms of the Tenkan-sen, pointing up quite sharply, reflecting this solid upside momentum that we've seen in both the second and the first time frame in this market. And as I've mentioned, it will be a very important level of support. Looking across here at the checker span, obviously that's trading above the price action, so it's confirming what we're seeing in all three time frames. So moving forward, obviously first time frame uptrend, the market is trending to the upside in all time frames, but the buyers have lost some momentum. There is a potential Japanese candlestick harami pattern. We do need confirmation of that, so we're looking for a lower high and lower low. If the market does come off, we should have very strong support down around the 1647 to 1650 level, and then potential support down to around the 1635 level, which is a minor level, and just below there around the 1622 level, and no major support until the market trades to 1600, but I doubt that we'll see the market trading down there in a hurry. But with the sellers taking control and this potential pattern, there is a good possibility of a change of trend, but let's look for confirmation first.